Bitcoin's getting much less risky. And I'm going to start with a review of the history here. In the last 1 year, Bitcoin's up 693% versus 4.66% for gold. Its Sharpe ratio is 4.7 versus 0.43% for gold. Over 5 years, a dollar invested in gold would yield $1.33. A dollar invested in Bitcoin gives you $132 for a Bitcoin. If you actually chose gold instead of Bitcoin, you lost 99% of your wealth. It's devastating. Over a decade, Bitcoin's running about 190% on average every year versus 1.65% for gold. And again, the Sharpe ratio is 4x as much. Let's take a century. Well, people know that gold was $20 an ounce, and now it's $1,700 an ounce. And so you could say, well, it's like up almost like factor of 80 or 90. But when you actually risk adjust it, you realize there's nobody that actually got that return over the course of the century. 95% of the gold was confiscated in the last 100 years. So maybe theoretically, the United States government might have got that gain, but everybody in Russia, China, every country in Europe, everybody in South America and Asia, they all lost their gold. So if you do a risk-adjusted calculation, you find that you invest $1, it should be worth $100, but you lost it, not all of it, 95% of the time, you got $5. And so the real risk-adjusted return over a century is 1.5% per year. It's not any better than the last decade. It's devastating. Over a millennium, gold, 2,000 years ago, gold was like 80% of money. Gold was money. And then it slid from 80% to 40%, in the Middle Ages. By the time we got to 1940, it's 40, and then 30, and then 20. And today, the monetary value of gold is maybe 5 trillion, half of the gold supply, and the total store of value in the economy is 250 trillion. So you divide 5 trillion and 250 trillion, and gold is 2% of all money. Over that time period, it came with thousands, if not millions, of massacres and seizures. People talk about Bitcoin being volatile, but in the year where Bitcoin went up 693% in 12 months, here are the maximum drawdowns if you look at the end of day closing price on Binance. 13%, 10%, 14%, 11%, 17%, 11%, 25%, that was the worst on 126, 21%, 16%, and 12%. So in fact, in order to get a max drawdown of 25%, to get a 693% advance is pretty historic performance. Bitcoin liquidities increased by a factor of 10 versus normal days over the past 6 months. We had 6.9 billion trade on Binance 2 days ago or a day ago. So you're talking about $10 billion a day in the spot market. Gold peaked August 10th, around the time that MicroStrategy announced that we bought 250 million worth of Bitcoin. And I came to this with a completely objective, clean slate. I said, I got to buy gold or I got to buy Bitcoin. But my conclusion was, if Bitcoin works, gold probably won't. And if gold works, Bitcoin won't. So what's the difference? Well, if I'd chosen gold, I would be minus $4 billion today over 8 months versus Bitcoin. It's a $4 billion choice. One is right, one is wrong. As everybody says, gold has a long history of manipulation by governments, banks, and miners. Jim Rickards, The New Case of Gold, he says the paper market could easily be 100 times the size of the physical market. Quote, there's no doubt we're seeing price suppression through the paper market. Rigging futures is child's play. I respect his comment. Bitcoin's first decade was marked by legendary volatility. There's no doubt, but the assets matured. The network has spread. It's entering its second decade. It's like LeBron James at age 19. The best player is always the most volatile player. If you look forward, what you see is an extraordinary asset on an extraordinary network that solves the problem better than gold can solve the problem. That's why I think it's the right choice, and there's consequence to making the wrong one.